Bill Gates and Warren Buffett both agreed that Charlie Munger is the most intelligent person they know. Charlie Munger once said, "Problems frequently become easier to solve if you turn them around in reverse. Unless you're more gifted than Einstein, inversion will help you solve problems." Now, let's use a little bit of inversion to solve your trading problems. Around 90% of traders lose money. So what we have to do is ask, what are 90% of these traders doing?
Okay, so far so good. The stat that I've always heard, and you've probably heard me say it, is that 90% of traders lose 90% of their account in the first 90 days of trading. Put in the chat a 90 if that happened to you. I'll put it in the chat because that definitely happened to me. I blew up my account twice. Lost over $200,000 before I figured out how to trade. And I was one of those people. I didn't lose 90% of my account, but in the first 90 days of trading, it was 2/3. Yeah. Lots of 90s. Yeah. And that's not unusual, right? It happened to me. But yet here I am on the other side making 92% last year. So it's not just you. You are okay, right? It's how our brains are developed, right? Us as humans are going to act certain ways when we encounter certain forms of stress. And it may talk about that in this video. But also, in order to be successful in the market, you have to do what the other 10% are doing, right? You need to stop doing what the 90% do and start doing what the 10% do. So hopefully he covers that. Let's see what it is.
First, they buy breakouts and they sell breakdowns. Yes, they're literally chasing the stock price around. Second, they all try to cut their losses short and let their winners run. Where are they letting their winners run to? Straight out of their trading account? This idea sounds great in theory, but it just doesn't work.
Well, this video is going to get a bad score from me. Okay. I don't know what the hell this guy's thinking. Hold on. This is like the opposite. Hey, wait. Hang on. Maybe I misheard him. Let me we're going to rewind that.
Problems. Around 90% of traders lose money. So what we have to do is ask, what are 90% of these traders doing? First, they buy breakouts and they sell breakdowns. Yes, they're literally chasing the stock price around.
Because that's trend following. Oh, this is not where this took a very hard left turn. Welcome to the school of trading. I'm your teacher, and this guy's gonna get wrecked.
Second, they all try to cut their losses short and let their winners run.
So I just got the bullhorn. This is gonna be brutal. Okay.
Where are they letting their winners run to? Straight out of their trading account? This idea sounds great in theory, but it just doesn't work. Third, their greed causes them to size their positions way too big. Have you ever heard the saying, don't overtrade, focus on the best setups, and increase your size on the good ones? Look, there's some merit to increasing your size during periods of better opportunity, but don't overdo it or eventually you'll be wiped out of the game. Number 4, they are afraid of reducing their cost basis because they might be capping their potential profit.
Okay, I know where this is going. He's going to talk about selling options. Never cap your profit, but he's going to be talking about selling options, which is, in my opinion, the absolute, unequivocally worst way to trade.
Profits. For example, selling a covered call reduces your cost basis, but caps your potential gains. Now, listen.
Okay, so here's the deal. This is only a 4-minute video. What I want to do is I want to let him go through. I'm going to cringe everywhere. But then when we get to the end, we're going to rewind it and we're going to break down how wrong he is on so far 3 out of 4 points.
Unlimited profit potential is like a mythical creature. Now,
oh my, I might have a hernia today.
You see these 4 things most traders do.
I didn't realize that this was going to go this way. I just want to put this out there. I thought we were actually going to learn something about why 90% of traders lose money. But what's actually happening is I'm about to flip my shit.
But why do they do them? Well, some of it's human psychology, but most of it is because it's what they were taught by investment education websites. I know it sounds a bit hypocritical because I run an investment education website myself, but the difference is they tell you what will make you spend money. Unlike them, I will tell you the truth, even if it's not what you want to hear. Think about it. How
is this just an ad? This has to be an ad.
Appealing does cut your losses small and let your winners run sound? Sure, it sounds great, exactly what you want to hear, but anyone teaching this concept has either never traded before or they're just flat out lying. Now, that doesn't
Nope.
mean you have to have huge losses and tiny profits. If you're
Which is exactly what you're saying.
trading the right
I'm gonna shut up for a minute. I'm gonna let him talk.
strategies, this shouldn't even be an issue. Now let's use a little bit of inversion and flip these points around, and here's your new trading strategy. First, you're going to buy into weakness and sell into strength. Why? Because it's exactly the opposite of what most traders do. Now you might be saying, but if you're getting long into a sell-off, how do you know when the sell-off is over? The answer is simple. You don't. Nobody does. It doesn't matter if you're Warren Buffett or if you're Jimmy Buffett. You don't know if the stock is going to go up, down, sideways, or in circles. And I believe that stock price swings are random for the most part, but ultimately it's human emotion that drives market moves. So just don't fall victim to your emotions. Number two, you're going to book your profits and be patient with your losing trades. With a high probability trading strategy, almost all losing trades will become a winning trade at some point if you hang in there. If you're cutting your losses small, you're going to choke out a lot of good trades. And if you're trying to let your winners run, you're going to be very disappointed when your winners just don't freaking run like they're supposed to. Number three, you're going to keep your position sizes small. It will allow you to make decisions based on logic rather than emotion. The only way to be patient with positions is if you're sizing your positions correctly. If they are too big, then the day-to-day fluctuations in your account balance will cause you to make bad decisions and acquire gray hair at a very young age. And lastly, you're going to reduce your cost basis by placing trades with a defined profit strategy. These are strategies with limited profit potential, but they have a very high probability of success. And listen, if you're buying options, you're doing the exact opposite of reducing your cost basis. Consistently reducing your cost basis will pay you far more than that one home run that you might hit. If you swing for the fence, you're probably going to strike out. Raking in small profits over and over again is where you'll hit a grand slam. Following these simple guidelines will save you many headaches and a ton of money.
Oh my good gravy. This is possibly one of the worst YouTube videos I've ever watched for how to trade. I had no idea. This channel has 439,000 subscribers. This has 2.5 million views and is possibly, without a doubt, the worst financial education I've ever seen in my entire life. And it's not even close. Good gravy. This is so bad. I had no idea. So here's what we're going to do. It's a 4-minute long video, but I tend to talk a lot, so I'm going to run it at 1.25 speed. I want to break down every piece of this and why they're wrong. And I can't imagine people in the comments. I can't imagine people in the comments are like, "Oh my gosh, this is so good. You are too good. I saw a number of videos on this topic. This is the one that just hit to the point." No. Okay. I don't know if you can see it, but I was like really biting my tongue. Here we go. We're gonna go through this, and we're gonna work on this together. I'm really hoping we can get TrendSpider to work. Something went wrong. Dude, if this can work, it's gonna make things so much easier for my explanations. I don't know if it's gonna happen though. And I was just looking at my still, I don't know what happened to this my 2024 results. And maybe it has something to do with the web server thing last year, right? But I was really going to try and show you what this looks like in real time. I don't know why that it's broken like that. Okay. With all that out of the way, let's start over. As rare as my 10s are, this is a 1. Yeah, this is going to be really bad. Okay.
90% of these traders doing. First, they buy breakouts and they sell breakdowns. Yes.
Okay. So, you know what? Maybe I've got some slides here that'll help. If you want to buy breakouts, that is because you're trying to get on the stage 2 uptrend, right? A stage 2 uptrend in practicality is a breakout, right? A stage 2 uptrend is a breakout. No doubt about it, because it's breaking to newer highs, breaking to newer highs, breaking to newer highs, breaking to newer highs, breaking to newer highs. And then if you want to sell breakdowns on like on a stage 4 downtrend, it's breaking to newer lows, breaking to newer lows, breaking to newer lows, right? And clearly this channel has no idea, no freaking I don't think this person's ever traded before is what I think. Because buying breakouts and sell breakdowns is the only way that this works, because
only price pays.
I hadn't had a chance to scream in the bullhorn for a hot minute.
But only price pays.
Because that's what's happening. It's going up. It's going up. And you're buying the breakouts because that's what the trend is doing. If the trend is moving up, if the trend is going, ride the trend. Specifically ride the trend. Imagine you're a surfer, right? Are you paddling against the waves? Just like, oh, I have to surf and this is the only way I surf, and you're struggling and you're fighting? Or do you get on the surfboard and you let the trend of the waves carry you? That's the way the market works. Now, why does it work this way? Is because you have all these other people, not just you and your infinite wisdom being the one guy who's going to go counter trend, not just you and your infinite wisdom being a contrarian trader. I'm going to blow a gasket today. Not just you being the one guy saying, oh no, when the market's going up, I have to be the guy who sells. You know why I'm so passionate about this? Do you know why I'm so passionate about this? Because that's what I did. When I talk about blowing up my account twice, this is what I did. I was the guy who followed these people on the internet talking about selling options all day, being a contrarian trader. In fact, the video I did with Minervini last week, that was around that time. And you can hear Minervini say, Chris, this is why your trades suck. And it's because if you're the one person who's standing on the track, telling the trend train that's choo-choo and coming right down the line, going to take you right out. And you're the one person standing on the track saying, no, trend train. It's going the other direction. It's going to run you over. You are toast. You are going to be looking like marshmallows on the track. You're going to get just absolutely splattered. And that's because everybody is with that trend, pushing it higher. At some point, the trend will bend. I've never seen a stock that only goes in one direction, okay? But to say that you are so smart that you will not buy into the trend as it's going up, but rather you will sell the trend as it's going up, is exactly how you lose money. This is the worst video I've ever seen. Why 90% of traders lose money? Bro, you're literally teaching them that. You're literally teaching them that.
They're literally chasing the stock price around. Second, they all try to cut their losses short and let their winners run.
I had that mentality. I'm so glad I found this video, because now I get to share all of my painful experiences with you, so you won't do the same. So the channels that I would follow, and I don't want to call them out because I know several of the people who worked on these channels, but you could figure it out. The channels that I would follow would tell you exactly this. Cut your loot, they would say the opposite. What doesn't work. They would say, let your winners run and cut your profit short. What? Let your losers run and cut your profit short is what they would tell you to do. What this guy's telling you to do. Because to them, when you sell an option, you have time decay working in your favor. And when you have time decay working in your favor, it doesn't matter how long it takes. You're going to get that time decay. I think he even said that the majority of your losers will come back. If you're shorting the market, that was the wrong button. If you're shorting the market on the way up, it may come back. It may. But it might take you 2 years from 99 to 2001 in this particular example. Let me tell you a story. I was at the public library with my son ages ago. I think this was in 2015. And we were in the kids section, and I saw the queues were up. And the queues looked like this during 2015, right? Just like moving on up, brutally up every single day. And the people that I was following at the time, they were like, hey, listen, when you see the market going up, sell calls against it. I saw someone on here say selling calls is what blew them out. Hang on. Where's that at? I can't find the comment right now, but this is exactly what I was doing. I'm sorry, I can't find the comment, but I did see somebody's comment come through. I was selling calls. When you sell calls as the market's going up, you're taking a bearish stance. You want it to go down. You want it to go down. Unfortunately, when you sell calls when the market's going up, you have unlimited loss potential as it goes up, and a very small win potential. I mean, when I talk about the risk to reward being so skewed opposite of what you want to see, I'm talking about, here it was Brett. Brett, thank you for that. I saw your comment earlier. I'm sorry I couldn't find it again. That's just exactly what happened to me too, Brett. When we were at the library, I pulled out my phone. I saw the queues were going up, so I'm like, sell calls against it. Let's go. So without any plan whatsoever, I sold calls. And the queues went up the moment that I sold the calls until the moment that my account had nearly evaporated, because it was just going up day after day after day. I had no strategy on where I was going to get out, no strategy on where I was going to get in, and I had no money left after that trade. And I had no business putting on that trade. This is the absolute worst advice of all time.
Where are they letting their winners run to? Straight out of their trading account?
No, I'm not gonna, this is hard for me. This is so wrong. Maybe because this video was made 9 years ago, maybe since then they've figured out how trading actually works. But this is so bad.
This idea sounds great in theory, but it just doesn't work.
How in the world could this not work? Right? In fact, let's go to this this chart here, or this graphic. A 20% loss would take you 25% gains to get back to even. A 50% loss requires a 100% gain to get back to even. Let's break down what that means. Man, I was not expecting this. I'm really sorry. So imagine that your stock went down from $100 to $50. Okay, so now the stock is a $50 stock. So that's a 50% loss. We can all agree to that. In order to get back to break even, the stock has to double, right? It has to go up 100% to get back to break even. Losses work against you geometrically more than your wins do. In fact, I shared this slide in the Discord this morning. There's no shame in losing money in a stock trade. Not at all. But to hold on to a loss and let it get bigger and bigger, or even worse, to buy more, like averaging down, is amateurish and self-destructive. That came from Inversion, one of my mentors. And this is precisely what he's telling you. He has no idea. Like, it makes me wonder if he's even traded ever.
Third, their greed causes them to size their positions way too big. Have you ever heard the saying?
Okay, now this one I actually do agree with. Especially when you get on a losing or on a winning streak, you have the confidence at your back, right? You've got the wind at your back. You're like, oh, I'm on a winning streak. I'm going to size up, right? And then that's when the market teaches you a lesson. Hey, you need to be consistent with your position size. Now, I base my position size on ATR values. I don't know if we're even going to be able to look at a chart today to show you what ATR values are. Let me refresh. Maybe it'll work. But ATR values take into account the volatility of the stock. When the volatility is really high, you need to size smaller. When volatility is low, you can size bigger, right? But you don't just willy-nilly say, oh, I'm going to buy 1,000 shares or I'm going to buy 100 contracts every single time, because 100 contracts on Tesla is way different than 100 contracts on Coke, right? But if you size based on ATR, you might have 20 contracts in Tesla and 200 contracts in Coke, because the volatility of one is 10 times higher than the other, but yet your risk will be the same. So this is one area I can agree with. Rob, can we rate it a 0? Yes.
Don't overtrade, focus on the best setups, and increase your size on the good ones.
Shane.
Look, there's some merit.
Sorry. All right, Shane. Shane experienced a lot of what I experienced as well. I sold options. I was making decent money. Then one bad trade evaporated those profits. For me, it was very, very similar to that. It was I needed 10 trades perfect in a row for each one loser. Could you imagine the stress on every single? This is not high probability trading that he's talking about. When one trade wipes out 10 of your winners, you will never be successful. And that was me, right? I was watching videos just like this who were talking about selling calls, selling puts, doing all that. And I was just losing money hand over fist all the time. And I thought it was me. I really thought it was me. I was like, how am I the one person in the whole world that can't make money by selling options? I really thought it was me. But no. That's because the risk and reward is so skewed against you. And then here's the insidious part about this. Let me show you what I mean by insidious. Let's do theta decay options. Here's the insidious part about this. And I don't take this lightly. Open image in new tab. Okay, cool. Perfect. Now, at this point in my life, I buy deep in the money options because the theta decay does go down. I understand that as time goes on, I need to make sure I make my money, but it also isn't going to decay all that much. Now, when I was selling options, I was this guy right here. And when you sell an option, the theta decay takes time. Okay, it takes time. If the only objective you have is to capture that theta decay as the option seller, we're getting deep in options theory. So if this is over your head, don't stress. If the only thing you're trying to do is capture the theta decay and the movement of the stock, the delta means nothing to you. The insidious nature is over time, right? Imagine that this is let's call it a 2-week time frame. Right, so let's say this is 2 weeks. And imagine this is your stock and it's going down, right? And you sold puts against it. You want it to go up. You want it to go up or not down all that far. Let's say this is your break-even point, okay? And of course, it totally went through there. The insidious nature of this, and this is why when I realized this, I was like, I will never do that again. The insidious nature of this is because the time value, you've got 2 weeks for it to come back. So holding on to it seems to make sense to the option seller. Where's that at? Brett, let me ask you this. When you would sell these options, didn't you think at that time, I've got 2 weeks. It's okay if it moves around because I have 2 weeks to let it come back. But let me take it one step further. Because the market goes in trends, those 2 weeks, when you're like, oh, I'll give it time to come back because I have 2 weeks until expiration, usually look like this for me. And so day after day, week after week, I was losing money hand over fist because I thought I was giving it time to come back, where in reality, I was giving it time to work even more against me. This is exactly this chart right here. Knowing you need to get out when a stock does this because you're hoping that it goes on without you, goes back up, right? But what happens is it continues on wrecking your account. Now, if you're selling those puts, and you know you need to get out right here, but you're like, oh, I've got 2 weeks on it. I'm just going to let it run for 2 weeks. This happened to me day after day, time after time, over and over and over. Brett knows. So this is such a load of hogwash. It's grinding my gears more than you could ever imagine.
To increasing your size during periods of better opportunity, but don't overdo it or eventually you'll be wiped out of the game. Number 4, they are afraid of reducing their cost basis because they might be capping their potential profits. For example, selling a covered call reduces your cost basis but caps your potential gains. Now, listen, unlimited profit potential is like a mythical.
Yeah, unlimited profit potential is the only way that I trade now. And I suppose I am that mythical dragon. Man, I wish my chart was showing up on this because like I had 49, that's it, 49 trades last year. And there's clearly a glitch in Google I need to figure out. But it looks something like this: flat for a long time, step up, flat, step up, flat, step up, flat, step up, flat, step up, right? You can see it in the results right down here. 14% in May, 12% in July, 30% in August, 8% in September, 6.9% in October, and November was my only losing month. So actually it would have looked like this. November was my only losing month of 8%. Right? And I would not have gotten that. Impossible to have gotten that if I were just taking little teensy weensy bits. No way. No way.
Creature. Now, you see these 4 things most traders do, but why do they do them? Well, some of it's human psychology, but most of it is because it's what they were taught by investment education websites. I know it sounds a bit hypocritical because I run an investment education website myself, but the difference is they tell you what will make you spend money. Unlike them, I will tell you the truth, even if it's not what you want to hear. Think about it. How appealing does cut your losses small and let your winners run sound? Sure, it sounds great. Exactly what you want.
Because that's how it works, my friend. Mr. Skyview Trading. That is the only way that this game works. Janine says, actually, watching this video on someone giving all the wrong advice and then Christopher clarifying point by point is why it's so wrong. Very helpful, especially for those who are new and inexperienced. It's just really, really, really ugly to see somebody come in and say, this is why 90% of traders lose money. And then he describes specifically what it will take to make sure that you lose money. He's describing the exact situation to put yourself in to lose money.
Want to hear, but anyone teaching this concept has either never traded before or they're just flat out lying. Now, that doesn't mean
this guy's so full of baloney.
You have to have huge losses and tiny profits. If you're trading the right strategies, this shouldn't even be an issue. Now let's use a little bit of inversion and flip these points around, and here's your new trading strategy. First, you're going to buy into weakness and sell into strength. Why? Because
no, you will never do this. Do not be a contrarian trader. Do not buy into weakness and sell into strength. This is dip buying right here. Dip buying does not work. Will you find times where if you bought the dip and it goes back up? Absolutely. That will definitely happen. But you will also find yourself in situations like this, where you're buying something that's already going down because you feel like you are smarter than the market, when everyone else is out here saying the market is going down, when everyone else is saying AMD is going down, and you're the one guy who's like, oh, you know what? This has to go up from here. This is so wrong. Do not buy weakness. If anything, if you're going to boil down a successful trading, it's buy high and sell higher. And boy, do I wish the charts were working right now. Right? Okay, here we go. This one seems to be working. I'm going to let it work for a minute. I'm not going to change anything. We're just going to use this one. When you buy high and sell higher, buy high, sell higher, that's because you're going with the trend, with momentum, with everybody else out there screaming, buy, 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 buy. And what he's trying to tell you here is the exact perfect opposite of how it works.
Because it's exactly the opposite of what most traders do. Now you might be saying, but if you're getting long into a sell-off, how do you know when the sell-off is over?
We know. Who knows it? Type in the chat. There's 3 numbers. We know how to know when the sell-off is over. I know you know. Put it in the chat. I know that you know how to know when the sell-off's over. I'm going to wait. It's 3 numbers, not 3 letters, Bjorn. 3 numbers. Lars, first one. This is the 10-20-50. It's the outlier trend template, right? When your 10-period moving average is greater than your 20-period moving average and prices over your 50-period moving average, that is your trend. Now, there are times like right here, right? You might make a buck as it goes over, and wherever you get out, like I would close under the 10 right there, right? You might make a few dollars. And there's times where you might lose a buck, make a buck. But no matter what, if you follow that trend, it tells you the direction it's going. The 10, the 20, the 50. The short term, the intermediate term, and the longer term. All stacked together, all showing you which way the market's going. And it's not subjective. right? We're not drawing random trend lines. We're not doing things like this where it's like, I'm going to connect point A to B and go. Right? It's not subjective. It's math. It's legit math. And because it's math, it is a principle, it is a fact, and it is because this is what the market is doing right now. But because of 10, 20, 50, we understand that only price pays. Yeah, Janine's got it too. Everybody's got it. It's not 777s, Rick. Come on, give me a break. How do you know if the sell-off's over? You know because you're an outlier and you understand. It's the 10 over the 20, price over the 50.
The answer is simple. You don't. Nobody does. It doesn't.
You're right. You're right. Most people don't. I've only been making 2,000 videos before anybody heard of me. Everybody in the chat right now never heard of me before January 6th, which is when YouTube decided to start pushing our content. I have 2,000 videos on my YouTube channel that you can go watch. And a lot of them are going to be saying pretty much the same thing over and over and over.
It doesn't matter if you're Warren Buffett or if you're Jimmy Buffett. You don't know if the stock is going to go up, down, sideways, or in circles.
I do. You do. This guy doesn't, clearly.
And I believe that stock price swings are random for the most part, but ultimately it's human emotion that drives market moves. So
yeah, no shit, human emotions drive market moves. It's these people screaming buy, 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 and they're the ones pushing this up. And then at some point, someone's going to get the inkling, hey, you know what? Maybe this is, maybe I need to start taking some profits, right? And then things start to turn around, and that's your stage 3 topping. And then everybody's screaming sell on the downside. His contradictions to himself are so obnoxious.
So just don't fall victim to your emotions. Number 2, you're going to book your profits and be patient with your losing trades. With a high probability trading strategy, almost all losing trades will become a winning trade at
that is the insidious nature. And I knew he was going to say it. This is the insidious nature of selling options, because what he just said.
Losing trades. With a high probability trading strategy, almost all losing trades will become a winning trade at some point if you...
No. Almost all losing trades will become winning trades at some point is how you blow out, right? And it's not, let's forget about options. Forget about options. Imagine you buy a stock. Imagine you buy a stock and let's go over here. And it's working. And then it turns around and it goes back down, right? Are you now going to hold that? And no. Does AMD work right now? Please let the chart work. Yes. Almost all losing trades will turn into winning trades. Really? Do you really think somebody who bought AMD at 150, or even worse, if they sold puts on AMD at 150, would be up by now? No way. Almost all winning trades, or almost all losing trades will turn into losers. That's got to be the worst thing I've ever heard in my life. I mean, the math be mathin'. Carl says, do you ever use volume as part of your entries? Not really. I mean, volume's there, but it's not something I look at. I look more at the trend, though. It is so... Wait, no. There's 3 girls? Y'all cut it out. Not cool. Not cool. This is so bad.
Hang in there. If you're cutting your losses small, you're going to choke out a lot of good trades. And if you're trying...
If you cut your losses small, you're going to choke off a lot of good trades. He just described this. If you cut your losses small, you're going to choke off good trades. This is the beginners, the amateurs, the losers mentality.
Trying to let your winners run, you're going to be very disappointed when your winners just don't freaking run like they're supposed to.
And they don't have to. They don't have to go to the moon, right? And that's something I want to get across, is that winning trades can be small. They can be small winners. They can be big winners, right? And we don't know where that winning is going to stop. What I like to say is cut your losers short, let your winners run out of control. And sometimes they go bonkers, right? If we could look at something like hymns, we could look at something like hymns, just moonshot right there, right? Nobody can control where the winners will go. And so that's why I actually added this slide deck into the afternoon slideshow. Where's it at? Where's it at? Hang on. Here. There is no expectations for these trades. They don't have to be a home run every single time. No way. There are no profit targets. You just have a plan, and you plan to get out when one of your exit criteria is hit. And absolutely, no matter what. Yeah, I think he's trolling us. I think he's trolling us. His math ain't mathin'. I think he's trolling us.
Number 3, you're going to keep your position sizes small. It will.
And I disagree with this somewhat. I mean, you need to scale based on the. You need a base. I mean, if you had $1 million account versus a $100,000 account, are you really going to say, I'm going to trade the same size of my $1 million account as my $100,000 account? No, you need to scale based on the size of your account, and you need to scale based on the size of the volatility of that stock. There's no reason to go small if you have a strategic plan and you know where you're going to get out. You can go in pretty big. I go in like real deep.
Allow you to make decisions based on logic rather than emotion. The only way to be patient with positions is if you're sizing your positions correctly. If they are too big, then the day-to-day fluctuations.
I do agree with this. If you aren't sizing it based on something you're comfortable with, you're not gonna be able to sleep at night.
In your account balance will cause you to make bad decisions and acquire gray hair at a very young age. And lastly, you're going to reduce your cost basis by placing trades with a defined profit strategy. These are strategies with limited profit potential, but they have a very high probability of success.
No, there's a 0 probability of success if you're going to trade like this. This is awful. This is the worst thing I've ever seen on YouTube. This is misinformation. This is trading misinformation. But real quick, who am I? My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time, and this guy is not one of them. I've been successfully trading since 2009, but not all those years I was successful. I'll put it that way. And this is where we save time, make money, and start winning with less risk together as a team. So I want to ask you a question. What do you think? I'm starting something new. I want to get your opinion. If you minimize this video and head over to my channel, I'm starting something new on the morning shows where I want to get your opinion. So we started new poll questions here on my YouTube channel. Is trading psychology really more important than buy or sell, or is it just an excuse for bad trades? What I'd like you to do is I'd like you to go vote on this and then leave a comment in this video on how you feel about that, right? Do you think that psychology is king, or that entry and exits are everything? Like I said, go to my channel page and vote on it, and leave a comment on this video to let me know how you feel. But let's rank this one. Let's rank this video here, because in my opinion, this is the worst hot garbage I've ever seen. Absolute worst hot garbage I've ever seen. But that's just me. This is like off the page negative to me. -7. Yeah, there you go. -7 is worth it. Sarah, hey Sarah, I saw your question in Discord. We're going to talk about that in just a moment. A Scottish guy says it's an 11. Yeah, right. R3010. And I don't want to be ugly about it. I really don't. But it's trading misinformation is what it is. It is absolutely the wrong way to do it. What's my channel page? My friend Manny. It's Christopher Yule -outlier. That's me. Yeah, just head over to the channel page and click that video. Clearly, I need to put this in a different spot in the slide deck because I kind of ruined the momentum of what we're going to rank the video. So I'll have that changed for tomorrow, just so y'all know. But I do want to get your feedback here. So yeah, this is hot garbage. No offense. -9. This is why we're all here, to learn from you, Chris. Just forget about it. Yeah, this guy is off the chart for sure. I want to jump into the Discord because Sarah had a question that I really wanted to cover this morning. I didn't want to wait till later. Sarah said she bought the yearly subscription. She is a 3-year long-term investor. I listen to many YouTubers on DCA strategies and buying more on dips. I did sell a bunch of my junky stocks, which they recommended after it went down. Smart move. Now I want to use Chris's strategy to buy when it goes up. My question is, how many stocks are a good amount to trade in a 1-year time frame? So again, I had 49 trades in the entirety of last year. That's it. I would change the question to be less about how many to trade, certainly not how often to trade, because the only time to trade is when it sets up for your trading plan. That's the only time. Now, I put on a trade yesterday. I bought puts in IBN. I be in some puts in IBN. But I hadn't traded in like 3 weeks before that. Right? And there's no reason to worry about when to get in, how many trades to put on. Just in my opinion, develop a trading plan that works for you, and your trading plan will absolutely be different than mine, and that's okay. Develop a plan that works for you, and then only when you get the signal that says go, it's go time, that's when to get in. And when you get the signal to get out, it's time to get out. But generally, like, I think the most I had at any one time last year was like 7, and I didn't even have those 7 for all that long. So that's my opinion. Rather than how many stocks would be a good amount, it's, do you have a trading plan for when you'd get in, and more importantly, when you get out? So it was a great question though, Sarah. I really appreciate that. So real quick, if you haven't got the annual plan, just like Sarah has, you can still get it for just $2.99. That's only 82 cents a day. And if you're on the monthly trial and you want to convert, just shoot us an email and we'll take care of the rest. Now, let's look at a few of your stocks. I want to hear what your stocks are that you're looking at. And if the charts are working, we'll look at them. We're going to give it a shot. And if they don't, we're just going to have to bounce. So let's see what comes through. So put them in the chat, what stocks you want to look at this morning. And while you do that, TrendSpider's really let me down this morning. Okay, SoFi. I know a lot of people talk about SoFi. I want to look at SoFi and SMCI if both of those work. Sarah, you're welcome. You're welcome. I'm here for you. I'm literally here for you. I don't know if TrendSpider's going to work today. I hope it does. That would be wonderful. Okay, go to Chris's workspace, please. Okay, seems to be working so far. Let's do SoFi. All right, so SoFi is a great example. Somebody asked if SoFi was in stage 4. Yannick asked if SoFi is in stage 4. I think what we're seeing right here is SoFi is running up the wall of worry, ran up the wall of worry, and now it's at the stage 3 topping pattern right here. It's got these triple overhead order blocks, and it might be starting at stage 4 downtrend. You got your 10 under the 20, price under the 50, and as of right now, that's a bearish trend. I'm not saying that it's going to crash back down. It may, but it also may not. I don't know why there's so many SoFi fanboys out there. Like there's no reason to me to ever become a SoFi fanboy or any stock fanboy. All stocks are bad. Just every once in a while they cooperate. I want you to like keep that in mind. All stocks are bad, but every once in a while they work out. Because everything that you put in the market is risk. Everything is in the market at risk. Let's look at SMCI. I know. So what was the deal with SMCI? Okay, and now nothing matches on SMCI. Or no, maybe if I spelled it right, SMCI. Something about filing a paperwork or something. SMCI. I mean, okay, this is weird. So it says it's up 15%. Yet, is this candle right? It says it's up 15%. At 52, but yet it's like the same price it was yesterday. What is happening here? I'm worried about Kyle. I know. They were about to be delisted. Something is, they filed their paperwork last day, filed their 10K. YouTubers made them lovable. I don't get it. Hey, Deus Ex Machina Motorsports made it. Yeah, SMCI, I don't understand why it says it's up 15%, yet it's beside the candle it was yesterday. If it's up 15%, it should be way up here. I don't know. But if we're looking objectively on the chart, you got your 10, 20, 50, outlier trend template pointing north. You've got a couple of order blocks right here that's running up into. But I don't know. This chart's weird to me. And I don't know if it's just TrendSpider because the whole internet's having issues today or what. Arthur wants to look at BBAI. Ooh. Okay. So this one had its run up and then a close under the 10. I want you guys to write this down. A close under the 10 EMA means that the short-term trend is changing. Here's your cheat sheet. When the indicator of the short-term trend is the 10-period EMA. This is one of my exit criteria. I'll show you what I mean. This is one of my exit criteria. If the 10 EMA is broken, I'm out. Deuces. See you later. And that would have saved a bit here to here, about 22%. Now, this is not something that I'm you know, Monday morning quarterbacking and saying, oh, I would have got out here. No, I literally would have got out there. So Arthur, if you didn't have that trading plan, that's okay. For the next one, I want you to work on that trading plan and I want you to test it and see if that works for you. Okay. Because a close over the 10 and a close under the 10 would have done wonders, right? Oh my gosh, 85%. That was a crazy move right there. 85%. But this is not one I would own right now. Let's look at what is Nebius? That's the one Nancy Pelosi was getting into, but I don't remember its stock ticker. Can you throw the ticker in there for me? SNN. Whoa, look at this one. All right, so it started a little trend right here. It had been trending sideways for a while. The market breadth has been fighting. Not market breadth. The trend had been fighting with these moving averages, and then it popped up right here. Now, this giant move is up quite a lot, but it does have this order block up here at around 29.30. So, I mean, beautiful stock right now. But remember, the whole market is moving down, and because of that, I would be hesitant on this one. NBIS, thank you. Look at that. So 10, 20, 50. Let's say you had got in on a crossover the 10, just for example. Let's say you got in at a crossover the 10. Actually, would have crossed right there. You got out on a close under the 10. Still 20% in the span of 13 days. That's not too bad, but I wouldn't own this one. Dennis wants to look at UMC. UMC. I think the internet is still fighting me today. I can't look at it. I don't know why. The AWS problem seems to be pervasive across the whole world right now. Yannick asks, at what stage of market breadth would you go back in? The crossover? Yes, for sure. Let's pop over into Outlier and let's look at the market breadth. So market breadth has been going down since January 27th, when we called that top right there. Finally, the market price caught up to market breadth as it was going down. And it's super cyclical, Yannick. I mean, it's like 2 weeks up, 2 weeks down kind of thing all the time. So I don't know when the crossover will be. Nobody knows when that crossover will be. But to have your trading plan in place, to know that when it does happen, you're interested. That's the important part. It's the Russian Google. Let's try Sarah's and Jonathan's here. Let's try ABT. I don't know if it's going to work. ABT. Here we go. ABT worked. See, this is what a beautiful trend looks like. Tell me that video, the person in the video telling you, oh, you should start going short when the market's going up, right? How bad would you get wrecked on a trend like this? Real bad, like ultra bad. That is seriously bad. Do not go against that. But it is in this order block right here. This might cause some overhead resistance. Then you got another order block right up here. So now may be a great profit taking opportunity for you, but that's up to you. Sarah wants to look at RKLB. Is that the Roblox? RKLB? No, it's Rocket Lab. Ooh, Rocket Lab does not look good. I think Rocket Lab experienced what we would like to call in the business a very, very sophisticated term. I was just waiting to do it today. So you've got your stage 1, your stage 2 as it moved up. Your stage 3 happened fast. I mean, your stage 3 happened really, really fast. And now it might be on its way down to stage 4. You do have earnings here, it looks like, the next day or two. So yeah. Now, I'm really limited with what we can do because the internet is been hacked, it looks like. But of course, tell me in the chat what you're trading, and remember that only price pays. Be sure to come back tomorrow, and I'll help you save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. Listen, I recommend you watch one of those, and I recommend you have a fantastic day. We'll talk soon. Be sure to come to the live stream this afternoon. Talk soon.